Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're taking a close look at Bitdeer Technologies Group. We got a bunch of recent updates and reports sent in by a listener, actually.
Ah, okay. So Bitdeer.
Yep. And we're going to try and, unpack what it all means for you. Our goal here is just to cut through the noise, pull out the key insights from these different sources.
Sounds good. We've got operational updates from March 2025. Looks like some solid progress on their self-mined Bitcoin numbers.
Right, and something about their SEALMINER A1 rigs, mass production.
Yeah, mass production completed, and they got regulatory approval for that site in Tydal, Norway. Plus, they launched a new miner, the SEALMINER A2 Pro. It's supposed to be pretty efficient.
Okay, efficiency is always key. And we also have a due diligence report from April 2025. It gets on financials, business factors, management risks, the usual suspects.
And another analysis piece, too. Company overview, performance, financial health, strengths, red flags. The whole picture.
Got it. So we'll synthesize all this, try to give you a clearer picture of where Bitdeer's been and maybe where it's heading. Okay, let's get into it.
Let's start with those March 2025 operational updates then.
Good idea. The first thing that jumped out was the increase in their Bitcoin holdings, up to 1,156 Bitcoin. That's a tangible asset right there.
It is, shows the output. And completing that mass production for the SEALMINER A1s, that's significant too.
How significant? What were the numbers again?
They hit a production rate of 3.8 exahash per second, and crucially, 2.8 EHs of that was already, energized and running. Shows they can deploy kit pretty fast.
That is fast. And the Norway approval for the Tydal site, it feels like a big step for their expansion plans, right? Getting things approved internationally isn't always easy.
No, it's definitely a win. Norway's generally seen as stable regulatorily, plus access to renewables helps with ESG concerns and their European footprint.
Makes sense. Then there's this new SEALMINER A2 Pro. You mentioned efficiency, 14.9 joules per terahash. Why is that number such a big deal in mining?
Well, it boils down to cost. Mining takes a lot of electricity. So a miner that uses less power for the same computational muscle that directly cuts your operating expenses.
Okay. Lower energy bill per Bitcoin mined.
Precisely. In a market where Bitcoin's price can bounce around and with energy costs being a major factor, that efficiency edge is, well, it's huge. It could be a serious competitive advantage.
Gotcha. They're also spreading out geographically, aren't they? An agreement for a 50-megawatt site in Ethiopia.
That's right. Geographic diversification is a common strategy. It can mean access to potentially cheaper power, different regulatory environments, basically not having all your eggs in one basket.
So Ethiopia might offer good power costs.
Potentially. Lower costs, maybe different sources. Of course, operating in new regions always comes with its own set of geopolitical things to watch.
True. And their total hash rate under management hit 24.2 exahash per second. Where did that put them in the grand scheme of things?
It makes them a pretty significant player. Not the biggest, but definitely up there. We can maybe compare that better when we look at the financials and competitors like Marathon or Riot.
Okay.
And one more thing from March, they finished testing their SEALA 3 Bitcoin mining chip. Shows they're still pushing on the tech development front, which you absolutely have to do in this space.
Right. Staying ahead technologically. Okay, let's shift gears to the financial overview. This is based on that April 2025 report. Unaudited revenue for Q4 2024 was $69.0 million.
$69 million, yeah. Seems decent on the surface. But the report also flags a pretty substantial net loss for that same quarter, $531.9 million, which obviously means negative earnings per share.
Whoa, okay. That's a big loss compared to the revenue. Any indication why?
Well, the cost of revenue was high, $63.9 million. That squeezed their gross profit margin down to only about 7% for Q4.
7%. That is tight.
Very tight. The sources don't break down exactly why costs were so high. Could be energy prices, depreciation, maybe costs from scaling up. But it's definitely something to keep an eye on, see if those margins improve.
Makes sense. The reports also talk up their vertical integration as a strength, especially with those SEALMINER A2 Pro rigs they make themselves.
Right.
Why is that considered an advantage?
Well, being vertically integrated means they control more of the process. Designing their own miners, manufacturing them, operating them. It gives them potentially more control over costs and their supply chain.
And they can roll out their newest tech faster.
Exactly. They can deploy their own innovations like that efficient A2 Pro, maybe quicker than competitors who have to wait to buy from third parties. It could give them an edge.
Okay. And the geographic diversification we touched on. Norway, Bhutan, Ohio, Ethiopia. We talked Norway and Ethiopia. What about Bhutan and Ohio?
Bhutan is interesting, known for its hydropower potential, so possibility of low-cost green energy there. Ohio gives them a base in the U.S., different energy market, different regulations again, spreading the risk.
Right, diversifying across different types of locations. So back to the hash rate comparison. The due diligence report put Bitdeer around 24 EHs.
Yeah, compared to Marathon Digital, which was around 26 EHs at the time, and Riot Platforms, maybe closer to 12 EHs.
So that really frames it. They're right in the mix, a significant mid-tier challenger, you could say.
That's a good way to put it. Operating at a scale comparable to some of the big, well-known names in the public markets, definitely relevant.
Okay, let's think about wider industry trends. AI and cloud computing growth.
Hmm.
How does that play into Bitdeer's story? It seems like they're involved there, too.
Yeah, it's an interesting angle. They have this dual focus. Their AI cloud business saw a bit of a dip initially, according to one report.
A dip.
Yeah, but they're still pushing forward with partnerships, specifically mentioning NVIDIA H100 GPUs. It suggests a longer-term commitment to high-performance computing, or HPC. It's a move to diversify beyond just Bitcoin.
So not just a miner anymore.
Turned out to be, potentially. It diversifies revenue streams, which could be smart given Bitcoin's volatility.
And those regulatory moves, Norway's approval, the Ethiopia partnership, how do they fit the bigger strategic picture?
Well, it looks like a proactive strategy. The crypto mining regulatory world is still pretty messy and uncertain globally. So getting established in a place like Norway with clearer rules and expanding into new areas like Ethiopia, it probably reduces their dependence on any single region that might suddenly become difficult.
Smart risk management, basically.
Seems like it.
Okay, the reports also highlighted specific strengths and red flags. Let's cover those. Strengths, first, vertical integration came up again.
Yes, we covered why that's helpful control over hardware, costs, innovation speed. Another big strength mentioned is their global expansion and the sheer power capacity they're building out.
How much power are we talking?
The projects across Norway, Bhutan, and Ohio are aiming for something like 1,200 megawatts total capacity. That's a serious infrastructure investment pointing towards future growth.
That is significant. On the flip side, red flags. One mentioned was a slowdown in demand for their SEALMINER A2 rigs. What's the worry there?
Well, if demand for your latest product is slowing, it raises questions. Is the market saturated? Is competition tougher? Does it impact their sales revenue? It's definitely a trend you'd want to monitor in their results.
Okay, a potential indicator to watch.
Yeah.
And even with the Norway success, the general regulatory risk across all their operating regions is still flagged.
Absolutely. That risk never really goes away entirely in the sector. The landscape is constantly shifting. A positive step in one country doesn't eliminate the risk of negative changes or increased scrutiny elsewhere. It's just the nature of the beast right now.
Got it. So looking forward then, what potential catalysts or future developments should people be aware of?
A big one is the completion of that Bhutan data center, 500 megawatts. That's a massive increase in potential operational capacity. That could be a major growth driver.
500 megawatts, wow.
Yeah. And also the continued rollout of their HPC and AI strategy. They've got Northland Capital advising them on that, apparently. Success there would mean new revenue streams, less reliance on just Bitcoin.
Diversification again.
Right. And, any positive comments from management about hitting or beating their hash rate targets for Q2 or Q4 would obviously be seen as good news, showing operational execution.
But we always have to mention the risks, right? Bitcoin price swings.
Always. Bitcoin's price volatility directly impacts miner profitability. That's fundamental.
And the regulatory scrutiny on energy use.
That's the other big one. Increasing pressure on energy consumption could lead to higher costs, carbon taxes, maybe even operational limits in some places. It's an ongoing challenge for the whole industry.
Okay. One last piece from the report's analyst sentiment. What did the due diligence report say about that?
It mentioned an analyst price target range from $22 up to $30 per share.
22 to 30. Compared to where it might have been trading when the report came out, that suggests?
It suggests significant potential upside, yeah. Indicates that at least some analysts see a path for substantial growth for the company.
Interesting. And just quickly, that report also compared Bitdeer's gross margin to peers like Marathon and Riot.
It did. We mentioned Bitdeer's margin was around 7% in Q4. The report contrasted that with Marathon, maybe in the 35–50% range, and Riot around 25–40%.
That's a pretty stark difference.
It is. It highlights that profitability difference, likely due to things like energy costs, operational efficiency during that period. It shows an area where Bitdeer might be looking to improve to match up better with peers.
Okay, so wrapping this all up, We've looked at Bitdeer, seen some strong operational moves, expanding infrastructure, developing their own tech.
Right, definite momentum there. And this move into AI and high-performance computing as a whole other layer, a potential diversification play.
But we also saw that significant net loss reported for Q4, and you can't ignore the basic volatility of crypto markets and the regulatory risks. Those are definitely still factors.
No doubt. The risks are real. But those analyst price targets do point towards some optimism about the future. It really depends on execution, doesn't it?
It does. You'd need to watch their financial performance closely, see how that AI diversification actually plays out, and keep tabs on any regulatory shifts.
Makes sense.
So this brings up a question for you, the listener. How does Bitdeer's strategy, this kind of dual focus on Bitcoin mining and high-performance computing, fit into your own investment thinking about the tech and crypto sectors? It's quite a unique position.
Definitely unique. Lots of potential, but also specific challenges that come with trying to master both areas.
We always encourage you to do your own further research. Check out their investor relations page, look for the latest filings, get the most current info.
Good advice. Things change fast.
Well, thank you for joining us for this look at Bitdeer Technologies Group.
Thanks for having me.
If you found this analysis valuable, please do subscribe, like, and maybe leave us a comment. It really helps us know what kind of information is useful to you and bring more of it your way.